Good morning and welcome to 5 Before the Bell, TheStreet.com's daily global market preview, and of course the US market preview and the European market update right here from the heart of the financial district in central London and the studios of Core TV. I'm Martin Baccardax. I am the London Bureau Chief here at TheStreet.com. I'm going to take you through those 5 things you need to know before the bell. A lot going on today. Let's get right to it with European markets because what I'm seeing is really interesting over the last 10 or 15 minutes. Now, we started on the back foot here in Europe, and it's probably no surprise given the fact that we had that significant decline yesterday on Wall Street. The S&P 500 had its biggest one-day fall in over 3 weeks. 230 points plus were trimmed off the Dow Jones Industrial Average, and we saw U.S. Treasury 10-year yields fall to the lowest level in about 10 months. Asia, of course, responded in kind. We were deeply into the red, but then we started to stabilize. And in fact, even though Europe opened up in the red, we were stabilizing as well. But what I'm seeing right now is a bit of a pullback on the optimism that Wall Street had a couple of hours ago. And at the moment, it looks like we might open flat to a little bit to the upside. But I'll be interested to see what will happen throughout the session because, as some of you will remember, although hopefully most of you won't, I was horribly wrong yesterday. I thought we were going to get into the green. I really did. And then, of course, the Dow decides to fall about 230 points. Didn't make me look particularly good. Worse for those who are long equities, of course. And that's always the most important consideration. But nonetheless, it was a little bit mystifying. Market jitters across the board, as you can imagine, given the escalating tensions that we're seeing in and around North Korea and the fact that President Donald Trump doesn't seem to have a whole lot of support for his approach with respect to economic sanctions and military rhetoric. Of course, Vladimir Putin from Russia has been critical of the president's response, and so has Xi Jinping, who is the president of China. Mr. Trump really only has one ally in the region, and that is Shinzo Abe, the Prime Minister of Japan, but that really doesn't carry a lot of clout in the region when you consider the historic hostility between both North and South Korea and the government of Japan. So it does reflect a very complex situation in the region, and that's certainly part of the reason why you're seeing a pullback in equities all around the world, and of course in Europe it is no exception. European insurance stocks are on the back foot as a result of the ongoing concern with respect to costs associated with Hurricane Harvey and Hurricane Irma, and actually, curiously enough, the outperformers were auto stocks today. Goldman Sachs upgraded its price target for Daimler, which is the maker of Mercedes cars and trucks. It says the company might be looking at changing its corporate structure and actually possibly stripping out some of the divisions into separate units, and that would unlock a decent amount of shareholder value. The last I saw, Daimler was trading in the 64 euro range, and Goldman has a price tag of about 81 euros at fair value over the next 12 months. So that'll be interesting to watch. But as I say, we are in the red, and we are seeing a little bit of a drift back, but we're still positive in terms of Wall Street futures. Now, moving on to Hurricane Irma, as I mentioned, its gathering speed is now a Category 5 hurricane, as we know, and it is approaching the Florida coast. The National Hurricane Center in Miami last night said the storm was potentially catastrophic, and it said its winds are topping 185 miles an hour. It's on its way to Puerto Rico right now, and it is gathering pace in the Caribbean Ocean. It really is an astonishingly powerful storm, and one that is going to trouble residents of Dade and Broward County and indeed all along the Florida coast as it makes its way there. Landfall is expected sometime on Saturday, and people are preparing indeed. What we're seeing as well is an indication of potential costs, even though it is, again, callous to talk about that when the human dimension is still being discussed. But nonetheless, there is an estimate out there in the region of 160 billion US dollars. That would be one of, if not the most expensive natural disaster in US history. The ultimate cost for Harvey in Texas and Louisiana is unknown. Greg Abbott, the Texas governor, says it could reach 180 billion US dollars, but that number might be a little bit inflated. Barclays analysts are putting the cost of Irma somewhere in the 160 billion range. It's curious because it will actually be the first Category 5 to make landfall if it doesn't slow down since Hurricane Andrew in 1992. And of course, residents in South Florida have bitter memories of that storm and the devastation that it wrought. There's only been 3 Category 5 storms to hit the U.S. mainland on record, and as I say, Andrew was the last in 1992. There's two interesting sidebars to the Hurricane Irma story. One is that gas prices in the United States at a retail level are still hovering around that $2.66 per gallon mark. They're really not pulling back, although it is nice to see the fact that they do seem to have stabilized. They're up about 26 cents from the same time last week, but they aren't rising too quickly anymore, and that's a result of gasoline futures falling because, of course, refiners and pipeline operators are coming back online in the petrochemicals industry heart in and around the Houston area. The second sidebar is that Bloomberg News is reporting that FEMA's disaster relief fund might be running out of money. In fact, on Bloomberg calculations, they're spending about $9.3 million each and every hour, and at that pace, they're going to run out of money by Friday, and that is the day before Irma makes landfall in South Florida. So unless congressional lawmakers can get together and get that $8 billion injection that President Donald Trump has asked for, FEMA could be struggling financially, and that's only going to put more pressure on residents in Florida and indeed all along the eastern seaboard of the United States if Irma does not slow down or change direction in the next few days. And the Hurricane Center says while it's too early to tell, it does believe that the path is accurate and it is going to hit sometime on Saturday morning. Now, speaking of President Donald Trump, we are looking at a legislative agenda in the United States for congressional lawmakers that is piling ever higher indeed. Of course, we know that yesterday he decided to rescind the DACA program, and of course, this has major implications for the 800,000 so-called dreamers which are living in the United States. For those not familiar with the story, and I can't imagine that too many are, dreamers were the children of illegal immigrants who were granted amnesty of some sort by President Barack Obama. They were going to be given rolling visas on a 2-year basis as a result of the fact that their decision to enter the United States was not theirs, and it was those of their parents, and it was felt unjust to punish them as such. Now, the President would like to rescind this. He says he needs to have a fair playing field for American workers across the board, and he needs to put citizens first. Regardless of where you stand on that issue, the President decided to kick it back to Congress. They're going to have 6 months to look at it, and if they don't rescind it, it's going to become an issue in March of next year. The reason I mention all this is because, of course, now congressional lawmakers are wrestling with a budget deadline, which comes at the end of September. They're also talking about the potential for lifting the debt ceiling. That's going to make for an interesting conversation, given the fact that the Republicans resisted debt ceiling increases when they weren't in control of Congress, and now they're pressing for it, given that they are. But I suppose, well, that's politics. There's also, of course, the myriad trade negotiations that are going on in and around NAFTA, South Korea, and other parts of the world. Effectively, what we're seeing, of course, is the legislative power of lawmakers in the United States being stretched to the limit as a result of all of the decisions that the President has made over the last 6 to 7 months. And we're seeing the administration itself mired in all sorts of activities that really require a whole lot of, well, I would say, administrative might. And as has been said of the Trump administration, it's not the most disciplined in U.S. history, and it doesn't have the most experience. In fact, the fact that it doesn't have that kind of experience is part of the reason why President Trump felt that he should be elected in the first place. All of this collectively, I believe, and from what I'm understanding from markets and the people that I've spoken to, is nearly as important as the rhetoric that we're seeing in and around North Korea with respect to the concern about paralysis in the administration and whether or not Mr. Trump can meet that broad objective of tax cuts and tax reform. Because, as we've talked about before, that is a significant part of the equity rally that ensued after Mr. Trump was elected in November of last year. So if we don't get the tax reform as a result of this ever complicated situation that we are finding both in Congress, both at the legislative and the executive branches, then we are going to see some pullback in global stocks, U.S. stocks in particular. It's simple arithmetic, and it is going to happen. This is something that we need to pay much more attention to in the months ahead, and we're all going to have to become political experts at the same time. And that's not an easy thing to do, and it's a wild card, and it probably does suggest that equity volatility is going to increase in the weeks ahead as well. Now, moving on to something a little bit lighter, the Boston Red Sox have been accused of using Apple Watches to cheat during Major League Baseball games. The New York Yankees, their bitter rivals, had actually noticed, it seems, according to reports from the New York Times, that a trainer in the dugout of the Boston Red Sox was looking at an Apple Watch during the game and allegedly relaying signals to players on the field. Now, Sign stealing, of course, as you know, has been a part of baseball for a number of years, but we've come a long way from the last major sign stealing controversy, which goes back to 1951 between the Giants and the Dodgers. Back then, it was a telescope and a buzzer, and today it's the Apple Watch. It's an interesting story. It's a fun one as well, given, of course, the popularity of baseball at this time of year as we approach the pennant races, and the fact that we couldn't think of any more storied franchises in baseball history other than the New York Yankees and the Boston Red Sox, and in point of fact, you couldn't think of two more teams that hate each other more than those two. Sidebar to this story, of course, is that Boston sports teams have been accused of cheating on a couple of other occasions as well, most notably and most recently with Deflategate surrounding the New England Patriots. Roger Goodell, of course, bringing a suspension down on their quarterback and multi-dimensional star Tom Brady. Rob Manfred, who is the commissioner of Major League Baseball, hasn't decided yet what he's going to do with respect to this controversy, but he's 100% sure, he said, that it isn't an ongoing one. And in fact, the Red Sox have said that the Yankees have been using their in-house television system to steal signals as well. So we'll see where this one develops, and in point of fact, at that stage, it's more of a sports story. For us, it's an interesting business story, of course, because the Apple Watch is now all over the news feeds of both the sports and the business district, and it gives a little bit of welcome, I would say, marketing boost to Apple as it approaches the launch of its iPhone next week. Of course, the anniversary edition is going to unveil some new iPhones and iPads, and this is not a bad thing to happen in the coming 7 days if we have Apple Watch on the mind, because of course that's been one of the underperforming stars of the tech giant stable. Probably the most amusing antidote to all of this came from ESPN reporter Mina Kimes, who said on Twitter overnight that the most interesting aspect of the story in general is the fact that somebody found a use for the Apple Watch. We're going to move on to Wall Street now. As I say, we are pulling it back a little bit with respect to Wall Street futures, but we are going to open in positive territory, although just mildly. A lot to get through prior to the end of the session today, including the Fed's Beige Book and a couple of other readings of manufacturing activity around the economy. Nonetheless, though, I think the fact that we are seeing significant declines for the U.S. dollar in overseas foreign exchange markets, and we are seeing upward pressure on U.S. Treasury prices, pushing yields down closer to that 10-month low of 2.05% is interesting. If 2% is ultimately breached, that's going to trigger all sorts of changes with respect to pricing fundamentals in equity markets, so look for that in a significant way, because we'll see major changes coming into September and then into the last 3 months of the year if that turns out to be the case. A couple of stocks that we are watching. Hewlett-Packard Enterprise is surprised with its quarterly earnings last night. Sales were up more than forecast, and that was the first time they beat estimates in 5 quarters, so that long turnaround under the tutelage of Meg Whitman is finally starting to give a little bit of gains. The stock is called about 2% higher in pre-market trading. It was higher overnight. It's just trimming that advance a little bit. Another story that we're going to pay attention to relates to Intel. You'll remember about 10 years ago, Intel was fined a then record $1 billion as a result of some anti-competitive practices here in Europe by the European Commission. They have been challenging that ruling for a number of years now, and only today received a ruling that will kick it back to a lower court here in Europe to re-examine it. Now, the reason I mention that is because, firstly, the fact that we're in year number 10 of this fine and we're still adjudicating it is a story in and of itself. But of course, you'll remember that Google was fined a record $2.4 billion by the European Commission earlier this year, and is in the mix of giving the EU remedies in which it can even the playing field on its online shopping platform. Now, the fact that Intel is still fighting this 10 years later means that Google probably is a long way from extricating itself from the EU's oversight. So we'll have to watch that one with interest, but it does remind us again that regulatory authority here in Europe plays a very significant role in the business activities of U.S. tech companies in particular and U.S. companies in general, and it doesn't go away, and it doesn't go away quickly. So we'll watch that one with interest as well. Oil prices are back and forth a little bit, although WTI crude is a little bit better bid as a result of that differential between global Brent crude prices, but we're not seeing anything significant as of yet. And as I mentioned, gas prices seem to be stabilizing at about $2.66 a gallon. Come back to TheStreet.com, guys, all throughout the day, because we're going to have more details on these stories and a whole lot more. But that's it from us here at 5 before the bell in central London. I'm Martin Baccardax, London Bureau Chief here at TheStreet.com. Thanks for watching. We'll see you tomorrow.